Have you checked the price of silver lately? It's been on an absolute tear, smashing records and leaving investors stunned. Just recently, silver futures rocketed past the $30 per ounce mark, hitting highs we haven't seen in over a decade. We're talking about a surge of more than 6% in a single day. So, what on earth is going on? Why is this often overlooked precious metal suddenly stealing the spotlight from gold? Today we're diving deep into the perfect storm of factors driving silver's spectacular rally. We'll break down the role of the Federal Reserve, the surprising supply and demand dynamics, and what this all means for you, whether you're a seasoned investor or just curious about the markets. Stick around, because the story of silver's surge is more exciting than you might think. Let's start with the biggest player in the room, the Federal Reserve. For months, the market has been hanging on every word from Fed Chair Jerome Powell. The big question has been, when will they finally cut interest rates? High interest rates are typically bad news for precious metals like silver and gold. Why? Because when you can get a good, safe return from bonds or savings accounts, holding a non-yielding asset like silver becomes less attractive. It's all about opportunity cost. But recently, we got some crucial economic data that shifted the entire narrative. Inflation numbers came in a little softer than expected. This wasn't a huge drop, but it was enough to signal to the market that the Fed's aggressive rate hikes are finally working to cool down the economy. This change in inflation data has dramatically increased the odds of a Fed rate cut later this year. Traders are now pricing in a very high probability, some say over 65%, of a rate cut happening as soon as September, and they're almost certain we'll see one by December. And when the market anticipates lower interest rates, the opposite effect happens. The US dollar tends to weaken, and the appeal of holding precious metals skyrockets. A weaker dollar makes silver cheaper for investors holding other currencies, boosting global demand. Plus, lower yields on bonds make non-yielding silver a much more competitive investment. This anticipation of a dovish pivot from the Fed has been like pouring gasoline on the fire for silver prices. Investors are front-running the Fed's move, buying up silver now in expectation of it becoming even more valuable once rates are officially cut. But here's where it gets really interesting. This isn't just a story about monetary policy. Silver has a dual personality that gold just doesn't have. It's both a precious metal, a store of value, and a critical industrial metal. And right now, the industrial demand for silver is absolutely exploding. Think about the green energy transition. Silver is a key component in solar panels. It has the highest electrical and thermal conductivity of any metal, making it irreplaceable for photovoltaic cells. As countries around the world push for more solar energy to meet their climate goals, the demand for silver from the solar industry is going through the roof. Last year alone, the solar sector's appetite for silver grew by a staggering amount, and that trend is only accelerating. It doesn't stop there. Think about electric vehicles, 5G technology, and all the electronics that power our modern lives. Silver is in almost all of them. Its unique properties make it essential for circuit boards, connectors, and batteries. So, as we build more EVs and expand our digital infrastructure, we're consuming more and more silver. This creates a fascinating dynamic. While investors are buying silver as a hedge against inflation and a bet on lower interest rates, industries are buying it up for manufacturing. This two-pronged demand is creating an unprecedented squeeze on supply. Now let's talk about the supply side of the equation, because this is where the plot thickens. For the past few years, the silver market has been in a structural deficit. That's a fancy way of saying we are consuming more silver than we are mining and recycling. This isn't a one-off event, it's a persistent trend. Mining output has been relatively flat. It's not easy or cheap to open new silver mines, and many of the world's largest silver deposits are in politically unstable regions, adding another layer of risk and uncertainty. So, while industrial and investment demand are both firing on all cylinders, the supply simply can't keep up. This fundamental imbalance is the bedrock of the current price surge. It's simple economics. When demand outstrips supply, prices have to go up. And that's exactly what we're witnessing in dramatic fashion. This supply deficit is causing a massive drain on the global stockpiles of physical silver. Major commodity exchanges and vaults, like those in London and at the COMEX in New York, are reporting significant outflows of their silver inventories. These are the stockpiles that back up the futures contracts and provide liquidity to the market. As these stockpiles shrink, it creates anxiety among large-scale investors and industrial users. They worry that in the future, they might not be able to get their hands on the physical metal they need. This fear can lead to even more aggressive buying, creating a self-reinforcing cycle that pushes prices even higher. We're seeing a situation where the paper market, the futures contracts, is being tested by the realities of the physical market. The recent price action got so wild that it even triggered a stop logic event on the COMEX exchange. This is basically a circuit breaker. Trading became so erratic and the price moved so fast that the exchange had to pause for a couple of minutes to let the market cool down and regain some order. This kind of halt is rare and highlights just how intense the buying pressure has been. It is a clear signal that we are in a period of extreme volatility and significant market movement. When you see trading halts like this, you know something big is happening. It wasn't a glitch. It was the system's way of handling an unprecedented flood of buy orders that momentarily overwhelmed the sellers. So, let's put all the pieces together. On one hand, you have the financial world betting big on the Federal Reserve cutting interest rates, which makes silver a hot commodity for investors. On the other hand, you have a massive and growing industrial demand driven by the green energy and tech revolutions. Both of these powerful forces are running headfirst into a supply chain that's already stretched to its limit, resulting in a structural deficit and dwindling global stockpiles. This combination has created the perfect storm for silver prices. It's a squeeze from every possible angle. It's not just speculative frenzy. It's underpinned by very real, very powerful fundamental factors. Now, what does this mean for the future? Many analysts believe this is not just a temporary spike. They see this as the beginning of a major repricing of silver. For years, the gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been historically high. This suggested that silver was undervalued compared to its more famous cousin. We are now seeing that ratio start to contract sharply as silver outperforms gold. If this trend continues, silver could still have a lot of room to run just to catch up to its historical relationship with gold. Some are even calling for silver to revisit its all-time nominal highs near $50 per ounce, a level not seen since the Hunt brothers famously tried to corner the market back in 1980. Of course, no market moves in a straight line. After such a rapid ascent, it's natural to expect some pullbacks and consolidation. Profit-taking will inevitably occur, and the market will likely remain volatile. Any unexpected news from the Fed or shifts in global economic data could cause sharp swings. However, the underlying fundamentals, the industrial demand and the supply deficit, aren't going away overnight. These are long-term trends that are likely to provide a strong foundation for silver prices for years to come. The transition to a green economy is not a fad. It's a global imperative. The demand for silver in solar panels and electric vehicles is structural. So, is it too late to get in on the action? That's the million-dollar question, and it's one only you can answer based on your own financial situation and risk tolerance. Investing in commodities is inherently risky. However, understanding the powerful forces at play is the first step in making an informed decision. The story of silver in 2024 is a fascinating case study of how macroeconomic trends and real-world industrial needs can converge to create explosive market moves. It's a reminder that sometimes the most exciting stories in finance aren't about high-flying tech stocks, but about the fundamental materials that build our world. The silver story is far from over, and we'll be watching closely to see where it goes from here. Thank you so much for joining me today for this deep dive into the silver market. It's a complex but incredibly important story to follow. If you found this breakdown helpful and want to stay updated on the latest market trends, make sure to hit that like button and subscribe to the channel. Let me know your thoughts on silver in the comments below. Do you think it's heading to $50? Thanks for watching, and I'll see you in the next video.